stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
A couple of more top-performing companies have caught the eye of our strategists, Ryan McQueenie and Brian Hamilton. They're going to tell us about them, like now. You've got Best Buy.
I do, yes. So obviously a big box electronics retailer, basically the industry leader in what it does. As we can see here, looking at the price consensus EPS surprise chart, a pretty nice chart, especially over the last 2 years. Just one earnings miss over that time frame. In a second, we'll be looking at the latest result here. But what I want to just point out real quick is we kind of have what is a bit of a rarity sometimes in our style score system, which is kind of a triple whammy.
I saw that.
3 A's for value, growth, and momentum, giving it the overall A VGM grade.
Right.
So you're looking at a pretty unique opportunity for multiple different kind of trend-focused investors. Looking at the most recent earnings report, just last week, fourth quarter adjusted profits of $2.42 per share. That was up 25% year over year and well ahead of our Zacks consensus estimate. Revenues also up 14% and ahead of estimates. And just wanted to highlight retail stores, so we're always interested in comps. Enterprise comps up 9% year over year. Online comps up 18%. So good numbers in kind of all the key metrics we'd be looking for in a retailer's earnings report. How has this happened? Best Buy really focusing on improving the in-store experience, using competitive pricing and marketing, trying to match prices from competitors like Amazon, give you a reason to come into the store as opposed to simply buying something online. But at the same time, kind of increasing investments in its own e-commerce infrastructure. Just today, Best Buy said that it's going to shut down 250 small mobile phone stores. We don't typically look at massive store closures like that as a good sign for retailers. However, these small mobile phone stores are just 1% of total revenue, and they're actually the margins on these smaller stores are worse than the big box stores. So I'm actually looking at that as trimming a little bit of fat, probably a good sign headed forward. And then finally, I just want to bounce over here to the estimate trends. We're seeing strong positive earnings estimate revisions on 100% agreement in here. That's what we're always looking for both this current fiscal year and the upcoming one. And now with our current consensus estimates, we're looking at respectable earnings growth in the double digits for the current fiscal year and the next.
And also supported by a currently hot industry.
Yeah, definitely.
All right. Brian Hamilton, construction equipment is your category.
Yeah, H&E Equipment is really focused on heavy construction and industrial equipment. Now, they recently reported earnings where they beat the Zacks consensus earnings and revenue estimates for the third consecutive quarter. They saw revenues increase by a little over 20% and gross profits were up a little over 19%. They also saw double-digit revenue growth in their equipment rentals and new and used equipment sales segments as well. The company has been really benefiting by the increase in overall construction spending. Now, the Commerce Department recently reported that on an annualized basis, domestic construction spending topped a little over $1.2 trillion. Now, this is expected to continue to increase through 2018. Now, going beyond 2018, the President's recent infrastructure plan is supposed to really benefit companies like H&E, because H&E is more focused on the non-residential and commercial projects, which are really in line with the infrastructure projects that were outlined in the President's report. This news has really caused the stock price to do very well as late. I want to show you in the price consensus graph here. As you can see, 2016 it kind of muddled here, but boom, the second half where construction spending started taking off, we have a huge jump in overall price. We have increase in year-over-year estimates as well, giving us our strong growth story going forward. And to add on to this really long-term growth potential for the company, they're going to pay a 2.9% annualized dividend as well. So we got a really strong construction sector through 2018, and a company is going to pay us an above-average dividend.
Yeah. All right. Do either of you own either of these?
I do not.
I don't personally own it, but I have HEES in the income investor portfolio.
All right, thanks for that. Don't forget, more stock information always available to you on our website, Zacks.com. Just get over to the homepage and begin checking it out. It's there 24/7. With Ryan and Brian, I'm Terry Ruffalo.